Yes, folks, welcome back to the channel. Another video today. Today's one's going to be a really quick one, and I'm going to cover the trading plan that I've been using for the past 4 weeks. Super simple, and it's been really effective. My win rate is approximately 75% in the markets, and I'm using this strategy for all my funded accounts. I'm going to run through sort of what the breakdown of my strategy is. It's really simple. And then I'll show you three examples of trades that I've taken across different markets. So the Euro USD, the SPX, so the S&P 500, and finally the Nasdaq. So over here, I provided a breakdown of the trading plan. Risk management, 2% per trade. Points of interest. So for context, you will need to know the basics of ICT, smart money trading theory. So know what a fair value gap is, know what an optimal trade entry is, know what an order block is, and how to find your daily bias. I do have videos on all of the aforementioned. So check out my older videos where I cover all the concepts needed for this trading plan. But you don't need to go and watch the whole mentorship, the 2022 or 2023 mentorship. Like I've never watched a single full ICT video because he is very lengthy in his videos and he talks a bit too much. Um, but you can find a lot of videos online summarizing. I've made my own videos summarizing these concepts, so you can check them out. But points of interest are daily liquidity levels. So on the daily time frame, we'll be finding liquidity levels of interest. We'll be looking at breaks of structure on the 5 minute. So this essentially means a change in bias from bullish to bearish or vice versa. We'll be looking at fair value gaps on the 5 minute, and then retracements into fair value gaps on the 5 minute. So the times for trading this setup, in general, I take these trades between 8 a.m. to 11 a.m. London session, and then the New York Open, which is around 12 p.m. to 4 p.m. London time. But again, this isn't set in stone. From day to day, it will vary, but overall, those are the hours that I trade. I'm not gonna be like ICT and say you have to trade during this particular hour, or that's not how the markets work. They're not black and white. There is a lot of gray. There are days when maybe the trade will present itself outside of the so-called silver bullet hours. So use your intuition with experience, with backtesting, with time in the market. You'll get a feel for when you like to take your trades. Um, so ideally, you want to be taking your trades within 2 to 3 hours of session open. So what's the trading plan? And this is the good bit over here. So we'll be first using the daily time frame to do an analysis and find the direction of the trade we're going to take for the day. We'll be finding our daily bias using the daily time frame. That is the key part of this sort of trading methodology. Daily time frame, we'll be finding the direction of our trade for the day. We'll then move to the hourly time frame and look at our bias on the hourly. We'll then move to the 15-minute time frame and look at our bias on the 15 minute, just to make sure that everything sort of adds up. And ideally, we'd like alignment between all these different time frames, so between the daily, the hourly, and the 15-minute. Though in some cases, you won't get full alignment um, because there'll be sort of retracements on lower time frames of higher time frame movements, if that makes sense. But you want to be keeping an eye on multiple time frames because a single time frame does not tell the whole story. We'll be then taking trades on the 5 minute off of retracements into fair value gaps. And these trades have to be in line with the daily. Keyword is in line with the daily bias. I've not said the hourly, I've not said the 15 minute, the daily bias. And that way we ensure that we can take short-term trades with long-term targets, if that makes sense. Stop losses will set above slash below the displacement leg, depending on whether we're going bearish or bullish. Targets will always be at next liquidity, or I'll always be looking to target, around 2R. Though sometimes, honestly, I'll settle for 1R. I'm a very realistic trader. I don't look for crazy risk reward ratios. I take very low risk, very stable trades where I have a high chance of hitting TP. Um, I think all of this is going to make sense with the three examples we're about to do. So I'll jump straight into the first example. All right. So the first trade was a trade I took using this particular setup. Let's call it the Ebro sweep on the Euro USD. I took it on Friday, the 3rd of November. When I opened up my chart in the morning, it looked something like this, daily time frame. Um, so just looking at this chart at the moment, I'm trying to find my bias for the day. Am I going to go long or short? Am I going to go bullish or bearish? I look at the daily candle for Thursday, and I can see that it was a bullish candle that swept the previous day high, and almost swept the high of Tuesday as well. So this is a bullish candle where we swept the previous day high. So what I'll do is I will simply use this drawing tool over here to mark out the high, the low, and the high of Thursday. And going off of the behavior on Thursday, the fact that we swept previous day high, closed outside the range, I'd actually be looking to sweep Thursday's high on Friday. So this to me looks like clear bullish movement. We've gone from a really long wick at the bottom on Wednesday to a very bullish candle on Thursday, where we took the previous day high and closed outside of the range. That tells me that on Friday we're going to continue that. We're potentially going to sweep this high over here and sweep this high over here. So we've got two bullish targets for Friday, and that is enough of a reason for me to look for buys on Euro USD on Friday. So this right here is the daily time frame. I'll immediately go down to the hourly time frame or the 5 minute and wait until market open. So we've got all our targets marked out. We can see that I look for trades around session open. So I'll start looking for trades around 8 a.m. And I'll stop around, I want to say around 11. We've got news over here that came out. So obviously I'd check Forex Factory. This was Friday, the 3rd of November. So let's see, are there any significant news releases? We had hourly earnings, non-farm employment, unemployment rate, um, forecast actual. So these were all bad for the US dollar, which means they were good for the euro, which means they were bullish for the pair. So it's all bullish news. So I trade, and again, that's in line with my bias for the day. Let's just skip ahead to 8 a.m., which is when I'll start looking for trades. This is all Asian session. We don't care about Asian session. We don't trade during Asian session. So we pull up our chart over here. Now I'm essentially looking for bullish entries. So if we go back to our plan over here, I am looking for. So I'm checking the daily time frame to establish my direction, which I've done. I'm now going to check the hourly, the 15-minute, and then 5 trades on the 5 minute. So I'm now going to go to the hourly. Let's see what the hourly is saying. So the hourly, we can see that we've got higher highs. So we've got a high, we've got a higher high, and we've also got a higher low. So we're bullish on the hourly, and that is in line with looking for buyers. 15-minute has also been bearish for a minute. It's stuck in a little bit of accumulation over here, but in general, we're not seeing anything that shows strong bearish conviction, and so we'll stick with our initial analysis, which is looking for buyers. Now I'm on the 5 minute. All I'm doing right now is looking for, currently on the 5 minute, we're actually bearish. So we can see we've got a lower low, we've got a high, we've got a lower high. So what I'm looking for is bullish movement and then a retracement into a bullish fair value gap. That is what I'm looking for. So we'll go through this candle by candle and see, do we form a setup? Let's see what happens. Also, we'll turn this on, and that's just an indicator that shows us all fair value gaps that are formed. So again, so pretty bearish. We're looking for bullish movement and retracement into a bullish fair value gap. So we see right over here that a bullish fair value gap has formed. We see that we've now formed a higher high. So we had a high, a lower high. There's a break of structure to the upside. We've got a higher high. And we've got a fair value gap that's been formed, and we've touched the fair value gap. So we've got a break of structure. We've got a fair value gap. We've touched into the fair value gap. So the fair value gap's been respected. And this, for me, is sufficient conviction or sufficient reason to take a buy. So all I'm going to do right now is go long. That's it. Simple as. No equilibrium levels, no order blocks, no this, no that. Very simple, very to the point. We'll be taking a buy, we'll say off the top of this candle with a stop loss slightly below the fair value gap, targeting 2RR for a start. So just over here for a start. And we could set TP3 and TP4 at higher levels. So perhaps I'd have, one take profit over here, in the middle of this fair value gap, another take profit over here. But for a start, my first TP would always be at 1 or 2. So let's see what happens. So we're in drawdown for a little bit. We're in drawdown for a small amount. And then we immediately go bullish and we smash take profit. And that is exactly the trade that I took. It was very simple. It is all built around, like I said, the daily time frame analysis. And my last video covered exactly how to find my draws on liquidity on the daily time frame. Daily time frame analysis is where this method starts, and then the execution is on the 5 minutes. So this was the trade. Let's see how this plays out. And I think it just keeps running. So if you'd set multiple TP levels, you could have potentially hit 6 risk reward ratio on this particular trade. Let's go into the second example. All right, so this was the second trade. This is example number 2 of the Ebro sweep. So I took this trade on Wednesday, the 1st of November. Open up the charts, daily time frame. Again, go back to this, start on the daily time frame. We could see that we'd been forming lower lows and lower highs. However, Monday had seen a bullish candle followed by a bullish candle on Tuesday, where on consecutive days we swept the previous day high and closed outside the previous day's range. Again, I've made a video on this. Check it out to sort of better understand how to do daily time frame analysis. But we could see that Monday's high had been swept on Tuesday. We'd established a new high. And so for me, looking at this, I can quite clearly tell that Wednesday's candle is also going to be bullish. I'm going to sweep this high over here. So my bias for the day is bullish because we've swept highs on consecutive days. We've swept Monday's high on Tuesday, and on Wednesday, we'll sweep Tuesday's high. And again, look to close outside the range. So I'm looking for buyers, is the gist of it. We'll now go down to the 5 minute time frame and find and sort of mark out the hours during which we'll take our trade. So took the trade on Wednesday. The first window would be from 8 to around, I'd say 11 a.m. or 10 a.m. 2 hours from market open. And the second window, again, this coincides with ICT's kill zone hours, but not exactly. At the end of the day, they're just hours. This is just sort of when I was online. Again, I start looking for trades from 12 to 3 p.m. So those are the hours during which I will look to open trades and not necessarily close them. So let's just skip ahead to market open for London session. And I will show you exactly how I used my method to take the trade. So there's market open. So candle by candle, we'll turn on this indicator over here by like Salgo that shows us fair value gaps. Again, take the indicator with a pinch of salt. I mark out my own fair value gaps too, but at this point I've been doing this for years, so I can literally just look at the chart and see fair value gaps. But essentially what I'm looking for is a buy. So I'm looking for retracements into a bullish fair value gap. And right now, all I'm seeing is a whole bunch of bearish fair value gaps. So I am sitting on my hands until I see a setup on the 5 minute. Now around 11, I will switch from the 5 minute to the hourly time frame. I'll see what the hourly is saying. So on the hourly, I'm bearish, but I've just hit a bullish candle. And so things could start to turn around. On the 15 minute, I'm seeing consecutive lower lows and lower highs, but there is potential for a break of structure to the upside. We can see that we've got a lower high and a higher high. So that tells me that on the 5 minute, we should see a setup form soon. And now we're out of my window. So I'll just skip straight past all of this because I wasn't online during these hours. And I remember going online around 1 p.m., if I'm not mistaken. So we see this huge bullish fair value gap formed. And that would obviously be something I'm looking at to retrace into potentially. So let's see what happens. Okay, and we've got this beautiful retracement into this big bullish fair value gap. Now I am just looking for a break of structure to the upside. So we've got a high. I'm just looking for a higher high to form. Amazing. And there is our higher high. And with that, we could look to take our trade. Let's see if there's a retracement. So we retrace into the fair value gap quite briefly. Do we violate the fair value gap? No, fair value gap is respected. We're showing clear bullish momentum. We've got multiple bullish fair value gaps that have been respected. That for me is a sign to go long. So I go long here. I don't wait for a further retracement because we've already retraced over here. I'll put my stop loss just outside the fair value gap, I'd say over here. And I'd go for preliminarily around 2 RR. And let's see how this plays out. So a little bit of drawdown. Do we hit take profit? Let's see. So we hold this trade for quite some time. Let's skip ahead, and there we go. And ultimately, we smash take profit for 2 RR. You know, sometimes I'll be quite conservative and I'll set my first TP at 1 and then move my stop loss to break even at TP 1 with further TPs at higher levels. But in this case, I actually set my first TP at 2, which was more risk than I would usually take, but it ultimately played out because I did have strong convictions on my in my bias that I found on a daily time frame. I think that's enough examples for today, but I think you get a good understanding of how it is I've been trading for the past few weeks. My win rate is pretty good, around 75%. So I win approximately 3 in every 4 trades with quite a low risk reward. But for those of you that are looking to pass funded challenges, I really suggest looking at this strategy, back testing it, and trying it out because it's been working for me. Daily time frame, switch to the hourly and the 15 minute. Make sure everything adds up, and then look for fair value gap retracements on the 5 minute. Please like, subscribe if you've learned anything. Leave any questions in the comments. Um, I'm not sort of too experienced with YouTube, but hopefully I'm providing some value. And yeah, take care, folks. Peace.